Okay, everybody, it is me, Gregory Mannarino. It is finally Friday, June 17, 2022. I mean, this has been quite a ride. It's exhausting, at least to me. People, here's where we stand right now. It appears to me, gauging from what we're hearing out of the European Central Bank and what we are seeing with our own eyes, I'm talking about the 10-year yield here, that at least the European Central Bank and the Federal Reserve are now fully engaged in some kind of yield curve control, yield curve management scheme. And as I have explained to you, this process is massively inflationary. Realize again what I have told all of you repeatedly. Neither the European Central Bank nor the Federal Reserve have any kind of mystical, magical powers other than to lie consistently. So when a central bank says this is what they're going to do to affect the yield curve, they have to get into the debt market and make it happen. Right now, the U.S. 10-year yield is 3.22. We were at 3.5 just a couple of days ago. Obviously, there was a major event occurring, a massive sell-off in the debt market, and that hit the stock market pretty freaking hard. Now, just by some miracle, we're seeing this profound drop in the 10-year yield. At the same time, the European Central Bank says they're deploying some kind of emergency tools to emergency. Again, this is their word, emergency tools to prevent a crisis. You see, we're in a crisis, henceforth why they have to use emergency tools. But you see, they can't allow you to know that. And the Fed and the European Central Bank always work in concert. And this is what's going on here. So beyond any shadow of any doubt, at least in my mind, if you just, look, you don't have to be a rocket scientist to figure this out. Yes, we are playing a game of incomplete information. But knowing that, we have to at least attempt to fill in the gaps by paying attention to what's going on and believing what we see with our own eyeballs. Although, of course, they're going to tell us, oh no, what you're seeing is not real. It's always the same freaking story. You all know that. Anyway, so that's what's going on here. Some kind of yield curve control, yield curve management via the European Central Bank and the Federal Reserve. Now, let me just set the stage for you. This morning, I opened up my email box, and I'm talking about hundreds of emails, and I'm just going through these. People, look, you're all allowed to have your own take on the market. It appears to me that there are a lot of bulls here. Now, let me just put this into perspective. I am not a bull. I am not a bear. I just look at the market and come up with the most likely scenario. If you look at my track record going back as far as you want to go, except for the last 6 months, okay, I've been dead on. The last 6 months I have explained to you. 5 out of the last 6 months this market has moved lower. Okay. I have said as long as that 10-year yield stays stable, as long as we got a slow, steady rise in the 10-year yield, as we would expect to happen with the Fed raising the federal funds rate, with this talk of some kind of quantitative tightening. Look, this was a normal correction, as you know, markets have to correct periodically. Okay. We just recently fell into a bear market with regard to the S&P 500, which is the broader market. That's where everyone should be looking. Okay. Then all of a sudden we get this absolutely out of control movement in the price action of debt. We have a yield curve which is inverting. It's twisted all over the place. And then, so that really was it. I mean, we had one event, which was a normal correction, which now led to some other thing. But look at what they're doing. It's now obviously being managed yet again. We got the 10-year yield coming down, and looking at my emails this morning, it appears that a lot of you are buying here. Now, I'm not saying you're doing the wrong thing. Look, I explained to you just yesterday, I spoke to a very dear friend of mine who's trading for over 30 years, and he's telling me, Greg, you got it wrong. He's like, Greg, you got it wrong. This market's going much higher. He goes, you were right. but then you switched your position. The truth of the matter is, I only switched my position because I was watching the 10-year yield sell off. And to me, that raised an alarm bell. And all I did was move from equities into commodities. And again, this guy, I'm not going to mention his name here, he agreed that commodities are the right place to be. As a matter of fact, did you see Chuck yesterday? His very first video that he put out, what did he say to you? Commodities are the place to be. I firmly believe that. So in the event, let's just say, hypothetically, let's throw this out here just for fun. All you people are right that are telling me that, Greg, you're wrong, market's going much higher. Maybe it is going much higher. But so what? I'm in commodities right now. If I see evidence that the market is really going to start ripping higher, I can always reallocate funds. See, that's the beauty of what we do, okay? Investors, traders, my lions out here. We're not stuck into anything. We can move cash around on a whim, blink of an eye, snap of a finger. That's just the way it is. But for now, I'm going to sit tight here in commodities. I think it's the place to be. And the fact of the matter is, sincerely, beyond any shadow of a doubt, what we are seeing in the debt market is action by central banks. This isn't the average guy and the average girl running out saying, oh, I got to buy debt. I got to buy it right here. This is what I have to do. No, this is not. This is the action of central banks. You all know that it's in our face. Believe what you're seeing with your own eyeballs, okay? You don't get a move from a 10-year yield going from 3.5% to 3.2 in a matter of just 2 days without massive intervention by central banks. You understand? All right, so look, on the back of all this, stock futures are higher. We also have a pretty strong jump here in the dollar, the relative strength, comparative strength of the dollar. Yesterday, the dollar got slaughtered. We're getting a lot of that back this morning. As I already said, 10-year yield 3.22. Crude oil under a little bit of pressure. Gold and silver are flat. Cryptocurrencies are flat. That's the story this morning. That's where we stand. Look, people, if we take away one thing from what we are seeing here, okay, which to me, and I would imagine to most of you, is a clear intervention in the debt market by central banks, it's massively inflationary, people. Look, we've been lied to repeatedly for many, many, many months. It went from being transitory, which was a complete lie. You and I knew this literally from day one. We called it out. We said this is complete crap. Okay. Peaking. That was the story. It's peaking. It's peaking. It's peaking. And there was the mainstream narrative was freaking fist feeding this to you like you can't believe, forcing you to drink it like the garbage dog shit stirred up in a big pot mixed with cat shit and bird shit. Oh yeah, it was peaking. That all turned out to be a lie as well. Being pushed by the propaganda ministry. Imagine my shock here. No one could imagine how shocked I am. And now we got this other thing going on here. This is absolutely central banks getting in here. And they're buying the debt again. And this is going to come back in the form of a huge influx of inflation, people. So just be ready for it. I've been telling you for the longest time, you haven't seen anything yet. Food and energy inflation, they're not going to stop. And everything connected to it here. Real wages are going to continue to crater, and you're going to continue to be lied to by brain-dead, mummified Frankenstein presidents. They're going to tell you the polar opposite of what's really happening. Again, President Bidenstein, the freaking imbecile over here, said, oh, people are saving more money. People are wiping out their savings accounts just to make ends meet. He's saying that people are borrowing less. This is not true. Household debt, personal debt, consumer debt are off the Richter scale. It's not going to stop either. So realize that you are trapped in an environment of lies. And these lies are going to get worse. And believe what you're seeing with your own eyes. They're going to tell you one thing. Oh, don't believe it. it's true. Just open your eyeballs, listen to what's happening, engage your brain. Okay, it's not that hard, and you can see what's happening here, people. So again, I'm going to say this. I don't want to touch stocks right here. All right, that doesn't make me a bear. It just, all it means is I reallocated funds into commodities. And if the need be, I will reallocate back into equities. It's that simple. We do it on a whim, blink of an eye. That's how we do. That's how I operate, okay? And I only change like this when I see a material change to the dynamics of the market. And that's exactly what was going on. We were getting clearly a sell-off in that debt market that was profound. Now, complete reversal. Imagine my shock. This is central banks, and they're going to continue to play this game. Let's see how long they're going to keep it going. All right, people, look, that's it. This guy here loves you a lot. I mean that. Please share this video. Get it out there. I will see all of you at the end of the day. Looking very forward to it. I'm out of here.